It's Tuesday, May 27th, 2025, and time for your Monday market update. Thanks so much for watching. Happy Memorial Day. Hope you enjoyed the day off yesterday. It was beautiful here, so thankfully for that. And more clouds today, but yeah, such is life in Chicago. Let's take a quick look at your McHenry County numbers for the last 7 days. We had 165 new listings, 156 under contract, 97 closed sales, 28 price changes, 0 expireds, and 56 on the private network. Now, if you're like me, you are looking at our housing market and wondering what the heck is going on. Some homes are still selling with multiple offers. Some homes are sitting on the market. If you Google real estate news and look at CNBC, there's so many differing opinions. You've got the Redfin CEO saying that housing market is booming, and you've got other people saying that the interest rates are going to hold and stay where they're at, and they're going to be higher for longer. And it's just a lot of differing information and conflicting. So when we've got things like that going on, it's very hard to figure out the housing market. I kind of dive into statistics because that's really the only reliable information that we have. And a lot of it is so hard to know what is happening right now because we're on 30, 60, 90-day cycles. So we don't really get any evidence of what's happening today until 30 days from now when all the numbers come out for the months. So right now we're at the end of May, we're going into June. This should be a really bustling time for the real estate industry. And it seems like some things are kind of slowing down. Why? Well, what I did is I started looking at, number one, I look at interest rates. You know, the 3 I's of real estate that I always try to look at when I can't figure things out are the interest rates, inventory, and inflation. That's where I go just to try and figure it out. So when I look at interest rates, we had, so when I go on to Freddie Mac, their website, and look at what the interest rates are doing. Now, this is not what you're actually going to get when you go to your loan officer or you go to a bank. These are not the rates that you're going to get because everybody's interest rate depends on their credit score, their debt to income ratio, and all kinds of different things. But the only thing that I can actually track each week is the rate that Freddie Mac is loaning the money to the banks, okay? So January 16th of this year, rates were at 7%. For the 30-year fixed mortgage was 7%. By March 6th, it was down to 6.63%. And then it's kind of been going up and down from there. Over the last 3 weeks, they've been ticking up very slightly, and we're now at 6.86%. And a lot of this has to do with the tariffs. When the tariffs were sort of having this impending doom coming in April when they were going to go into effect, and then they were delayed, and now they're delayed again. And all of that is causing a lot of volatility. I've also heard from many of my construction friends saying that prices are going to go up starting June 1st as a result of the tariffs. So it's like, wait, are the tariffs paused? Are they going? Why are people increasing prices? Walmart's increasing prices. And I think a lot of people act on what they're hearing in the news and speculation of what they think is coming. So I feel like a lot of buyers in the market are kind of like taking a pause right now and just like waiting to see what's going to happen because nobody knows and everyone's kind of afraid. So we've got inventory. We've now overall, if you look at all price ranges for single family homes, prices, we still have very low inventory. We have 1.5 months inventory in Crystal Lake, which is still up 30% year over year. So we still have more inventory than we had last year, but still very, very low. Remember that we measure our inventory in how many months it would take to sell out of whatever's listed. So 4 to 6 months inventory is a fair and balanced rate. Anything under 4 months inventory is going to be a seller's market. Anything over 6 months inventory is going to be a buyer's market. Now here's interesting. When I start to break this down by prices, it gets a little bit more, we get a little more clarity, okay? So anything under a $300,000 price point, there's like no inventory at all. Those things are selling in a hot second. Those things are still selling in like 2 weeks. If you look at the $300,000 to $500,000 inventory, those are still being sold very rapidly as well. When you start to get into the higher price points, you start to see that we have more inventory. For example, in our area, $750,000 is considered a luxury home, okay? Just because that's a high price in our area. Our average sales price is $400,000. So $750,000 or more is considered a luxury sale. In Crystal Lake, over $750,000, we have 7.3 months inventory. We have 14 homes on the market in Crystal Lake over $750,000. That makes it 7 months inventory, which means we don't have a lot of buyers over 750,000. So it's also called our absorption rate. How quickly are those homes being absorbed into the market? So when you're at a 7.3 months inventory price point, then we get into a buyer's market, number one, and we go back to the house having to be the prettiest. So it's a beauty contest and it's a price war. You've got to either be the prettiest or you've got to be the best price, sometimes both. So in those higher priced homes, we're seeing a very, very different market than we are in the lower priced homes. So that has to do with our area, and it also has to do with the sentiment of the buyers in that particular price point. In Cary, interestingly enough, at 750,000 or more, they still only have 1.6 months inventory. Still a seller's market because they only have 2 homes for sale over $750,000 in that market. In McHenry, we have 3.4 months supply. They only have 7 homes on the market. In Woodstock, we have 9 months supply. 9. Well, because they don't have a whole lot of buyers in Woodstock that are looking over 750,000, and they have 14 homes on the market. Okay, so that sort of starts to explain some of what's happening in the market. Is if you're looking at different prices, you'll see we have different things happening in those price points. So homes that are affordable under 400,000, 400,000 is our average sales price. Anything under that is still selling like hotcakes because there's just not enough to go around. We have a lot more buyers in that price point and they're selling really fast. If you look at the higher priced homes, those are sitting on the market a little bit longer. We have longer days on market. We have more available. It's more of a buyer's market, depending on the city. Isn't that crazy too? We've got some indications from Fannie Mae that 6.1% might be the interest rate that we're going to land at by the end of the year. We'll see. So much different speculation going on in the housing market though. So I don't know who to listen to. We've got various different sources. All of them are looking at different factors that get them to their assumption. Basically, nobody knows. But what I see personally is I'm getting a lot more phone calls from people who are aging. They're maybe in their late 50s, early 60s, who want to sell their big house and they want to rent. Isn't that crazy? They want to rent. What? I have 3 sellers that are going to sell their big house and move to a rental because they don't know where they want to go. And they think that now is the peak. It's the best time to sell because there's more homes coming on the market and they have the best opportunity to get the best price with doing less maintenance because there's a lot of maintenance when you've got a big house. And they want to simplify their lives and they want to move to a rental. Isn't that interesting? Just got off the phone with another one. Crazy. So we're seeing some different trends. New estimates for annual sales for this year are stating that we might even be at 4 million sales nationwide this year. That is the lowest we've seen since the early 90s. Very, very low number of transactions. Last year, we sold 4.1 million homes nationwide. We thought we couldn't get lower than that. And now estimates are saying we might only sell 4 million homes. So very, very low number of transactions. So that just means that the only people that are moving are the highly, highly motivated people who really want to move. They're either getting married, they're getting divorced, they are downsizing. Maybe they're not affected by the interest rates because they own their house outright and they're just going to, move something. The interest rates have no effect on them. Prices are good. But it is very, very interesting. Very few people are moving. That's just sort of the blanket. Appreciation is still chugging along. It's okay, but it's not great. It's starting to taper off a little bit. So that's another motivating factor for some of those people who want to downsize and get rid of the big house payment, even if they're not paying that much, but they just don't need the space. That's the baby boomer effect that we're going to see over the next few years too. Baby boomers have a lot of wealth. They own a lot of property and they are going to be shifting. They are going to be moving, whether it be into a senior living type of facility or if they are going to just be moving into a ranch style home. But we've got some things, some factors that it's going to be interesting to see how this all plays out. Very hard to predict. I will tell you, for the most part, homes are still selling well, but you've really got to be careful where you're pricing that home because it is a bit of a price war right now. So Thanks so much for watching. If you have any questions, as always, you can call or text me at 815-529-0777, or you can email me, Miranda at mirandaalteam.com. Thanks so much for watching. Have a great day.